We are looking at derivatives. Yesterday we talked about stocks. Derivatives in those achieve mu kigambo derive involve making a contract to buy or sell commodities on a specific date at a specific rate. Generally, derivatives okola contract with someone nti nja kubangula kasoli wo, for example kasoli achali mu nnimiro n'omugamba nja kugula kasoli wo, kasoli ono nsubira agenda kukuladi nti musubira tuli mu gwa 11 nsubira awo mu December wajja kuba akazi n'omugamba okay at which price kilo ogenda jinguza meka, then nagamba nti ngenda jiguza for example let me say buli kilo nja jiguza siringi 3 kati ye asinzira ku kyafu akastinga nawe mu agreeing at the rate diwe ogenda okusasula kasoli oyo obo mutwala no gaginga most cases ogaginga no laba nti what are the seasonalities of factors ezinzo oku affectinga supply of the kasoli on. Abantu bano babeera babiri, we have the buyer and the seller. Buyer ebiseera ebisinga kyabala he buys kasoli ono nga akyali wansi any commodity, not only kasoli, ayinza okuba gold, ayinza okuba currencies, ayinza okuba anything. Kyabala nti he has to buy the asset at a lowest price so that agenda okutuuka gyagenda omunonera at that specific date. Why do they go into the agreement of a contract earlier? So that ono yaba aba asubira nti kasoli mu maaso eyo ku date eyo tugeze December 15 kiwagenda omunonera kasoli agenda kuba higher than $3. Kyokka farmer ono supplier ye aba asubira this is the buyer, then this is the supplier. Buyer aba alowooza nti by the date of December 15th agenda kuba higher than siringi 3. Supplier ye ng'agamba nti nze kimmanyi kasoli agenda kubeera mungi mu December by this time. Kimmanyi agenda kuba more than less than siringi 3. Kati one of the two aba asaba nti price ye egende mu favor ye. So kati they go into an agreement oli n'agamba nti nze nja kutwala kasoli oyo nga 15 ku siringi 3 yena gw'onooba ofulumiza ng'akyali mu musiri tugeze. Kati ono n'abala n'agamba mba ntundidde ku price nnene ku siringi 3 mba nkoze amagoba kubanga ye abadde asuubira kasoli oyo yayandibadde at a lower price. That is what we call a derivative. You agree on a buy or a sell of a commodity at a specific date, a Twitter maturity date, and at a specific time. Derivatives are also commonly referred to as F&O stocks, or futures and option stocks. A futures contract entails the right and obligation to buy or sell a certain amount by predetermined date at a specific rate. And an options contract is similar. You buy or sell, but you don't have an obligation. Continue nyole bwenti. Twina esooka je tuyise futures. Futures kitegeeza nti you gwe buyer oba seller ogambye ngenda kale kan concentrating ku buyer. You want to buy something. Ogambye mu December 15th you're going to buy this one is bashirs kasoli ku siringi 3. Zona zanaba akoze eki zanaba afulumiza. It is a future. You're making a future contract. It is a future. That is what we call futures. So it is predetermined. The date it is predetermined. Kati eno maturity date olunaku bwe lutuuka, you have the obligation and the right. Oyina right tayina kutunda kasoli oyo nga gwe takwebuuzizaako. Ate you have the obligation. Obligation, I think, like you have to. I think that is what it means mu Luzungu. Toyina kuchireka, you have to buy. If you said you will buy date wetuuka eno predetermined date, you have to buy, you have to pay, and you have to take. Bwaba supplier nga yakola contract nawe, he has to supply at that date, at that rate. It doesn't matter oba kasoli ali kumeka oba ali kumeka. For him, he has to supply that kasoli ku siringi 3. Singa kasoli oyo tugeze aba alinnye nnyo naye nga supplier waliwo amuwaamu 5 kyokka nga gwe wamugula 3 before, ajja kuba akoze loss ya siringi 2. tugeze normal rate watuukidde mu December silingi 5 ye alina obligation okulaba nga supplyinga kasooli oyo ku 3 gwe olina right okubanga ofuna kasooli oyo ku 3 regardless of the current price gwe eyo yegundi yo eyo ye price yo oba ye payment yo ye profit yo to wait for up to that date. That is what we call a derivative and a futures. Generally bwe kiri bwe twogera ku futures. Now an option, it is the same. Oli aba ina naye gwe toina obligation. You have the right, ye gwe first person. You have a right not to pick or to take to supply. Olina right obuta supplyinga price wali oguze 3 naye kasooli atuuse ku 5 sigenda kusasula ye naakuddiza ssente zo oba nagamba kale kasooli engeri gyali ku 5 let me give you the difference amagoba ago nze nfuna agenda okunsasulamu other than making a loss and vice versa. The most common underlying asset for derivatives are stocks, bonds, commodities, currencies, interest rates, and market indices. These assets are commonly purchased through brokerages from a brokerage firm. Osobola okugula stocks ebiseera ebisinga zibeera mu quarterly like Q1 ne wabeerawo open bids oba open gund n'ogamba nti I'm buying Tesla for 3 months njagala tugeze ogiguze at a current price oba basobola okugamba nti Tesla tugenda giguza ku $150. Then ng'ogenda terekazi neno oba ogenda zipikinga oba in most cases they are options abasinga ba trading options ne futures we ziri naye abasinga ba trading buneno options kyobola ababita options trading nera kyobola banga abasinga baneno babuyita bakyaliwo obugundi ani amanyi buno bu adverts oba how I make money online using my phone. I bought a new car.
Later IQ options, X-Money expert or EXNESS, something
expert
like that.
Options, IQ options. So in most cases, those are options. They are not as IQ options. Yes, they are not as easy as determining. However, gambling, those are high frequency trades. Like they are just in minutes, seconds. Those are high frequency trades. Nera gundi abasinga bazi abolishinga mu US ne mu UK. Aliwo Bishop guy yali asinga oku advertisinga them bamukwata n'omukwato bayavaayo kati mukomera. So you can say I've made an option to buy a Tesla. Nga for you believe in 3 months or in 1 year it will be more than $150. Then if it goes lower than 500 tugeze ne gituuka emyezi 3 months nga eri less than over time gwe gyoyagadde naye zisinga gundi ziri 3 months and more ebiseera ebisinga zigwako ku Friday ebeera esembayo mu mwezi ogwosembayo ogwokusatu options ziba expiringa tetwayise expiry date oba maturity date. Kati if these options go below kale price nebeera below 150 tugeze eri $120. Kati eno you're gaining nothing ebeera worthless. You can leave the contract nga you're just over paying gundi over some fees simanyi naye you can leave nga tokoze loss ya $30 per share. But if it is more than 500 tugeze negenda tugeze ku 300 oba tugambe ku 230 then bagenda kubala difference bakuwe amagoba ago then yogundi oba okoze profits. That is what these options mean generally in stocks. Ne mu currencies nakyo bakikola wali eri tubadde mu commodities we tubadde ku kasooli interest rates nazo zisoboka tugenda kwongerako ku interest rates indices ebyo byonna bikola ki bisobola okugenda mu derivatives either through options or futures. Futures you have to, if you buy you have to be delivered, you have to pick, you have to take. Derivatives can be used to hedge a position, speculate on a direction movement of an underlying asset, or give leverage to holdings. Most cases, banena abasajja tujja ekigambo hedge fund. Hedge fund literally meaning nti in case nga aina asset jaguze asobola okuhedginga risk. In case nga tugeze agula obangambe, let me say gold. naga gold ali like okulinya. They use derivatives to hedge. It's okay until you just you're not having the underlying asset. The underlying asset is gold. Osobola omugula kati ku current gold, current price gold. That is how you're trading it. You buy and own. Naye if maybe gold yatandika okukkirira, then you can use a derivative of gold to hedge the risk ya gold by speculating on the direction at a specific time, because it also gives leverage. Bobo trading shares, stocks, there is no leverage. Naye waneno mu derivatives there is leverage, meaning you can buy gold wanabanga ali ku tugeze 1,700 per ounce or $1. You need 1,700 to buy an ounce of a gold, but waneno oyinza okuba oteekayo siringi 10 oba 5 n'ofuna the same 1 to 3. Oteekayo siringi 5 for example, ne bakuwa 1 to 3 times 3 your money. Instead of putting 1,000 tugeze 500, oteekayo tugeze 700, nobeeranga guze the full gold. Kati kiyambako okufreeinga capital that you can hedge using small capital. Eno bwebakkirira, you can hedge using a small capital okukendeeza ku risk. Tugeze bwe tuba tuli mu kwambuka gold n'atandika okukkirira, for you had bought gold, you think agenda kwambuka, n'olaba nti waliwo factors eziyinza okuleetera gold okukkirira even to below to your buying price. Kyokka obadde kale tugamba oli mu magoba, then you can use small capital n'ojja ku derivatives n'oteekayo n'ogamba eno week wadde gwe osuubira agenda kwambuka mu myezi egijja, mu myaka egijja, you're holding, you don't want to sell your gold. Naye mu kifo ky'okuluzinga zino gains, you can hedge this by selling gold on the derivative market. So what you use, ogenda kwata a few dollars, you get leverage, then leverage oyo kitegeeza nti bwe bagamba nti ogenda kwewola, literally kye kimitegeeza, oli ajja kugamba nti buli dola emu gy'olina ngenda kuwola $3. Kitegeeza bw'oleeta $10, your purchasing power, your account is literally like you have $30 you're trading with. You can chobadde ogula with $1, you can buy times 3. Bwagamba times 100, 1 to 100, kitegeeza buli dola gy'olina agenda kuwola $100. Leverage is so important bw'obanga omumanyi okumukozesa. If you understand leverage, it is so good. Ne mu crypto nagamba abantu nti institutions are coming into cryptocurrencies. For them, bw'abanga atadde million 10 mu crypto, $100 million tugeze, agenda kukwatayo million 3. Coins ezisinga ziri times 3 times Bitcoin eri ku times 3 times 5 times 10 also. Kitegeeza bw'ebanga eri times 10, bw'ajja n'ajja mu gundi mu exchange oba mu blockage farm gye tugambye, kitegeeza agenda kuba times 10, alina million 3 ng'ataddeyo just million 3. Eno yataddeyo 10 n'agula Bitcoin oba yagiguze ku $2,000. Kati bw'alaba nga waliwo any factor eyinza okuleetera, tagenda kukola loss nti atunule nga Bitcoin ekkirira ku gumu kitundu. He's going to sell Bitcoin ku leverage agenda okubaawo, agenda atadde million 10, agenda kukwatayo million 3 by hedging, ashortinge Bitcoin okukkirira. Kati loss gye yandikoze waneeno egenda kubeera covered by this short. Ate ng'akozeseza, kitegeeza capital wa million 13, naye already in opposition bwekwatayo agenda kubanga afuna ki more. Bwegaana agenda losinga 30 million, then asigaze 100 million. Jukira eno gya hedging eno mu derivative ateekayo sente ntono okusinga ku spot, n'akola amagoba mangi. That is why they don't care if the market is dropping. Ajja kubeera ne position okugeza S&P 500 ngeri mu kukkirira, ajja kubeera ne position ye for 10 years and derivatives for a specific years, this for long term and for short term. Kat in that case ojja kwesanga nga akola sente waneeno wadde alina position ye eno eya spot of the same underlying asset, and they use these derivatives most cases to hedge funds, ezo zi venture capitals. They cannot and they will never open any open position without hedging it. They will never. These assets are commonly traded on exchanges or on the counter, OTC, meaning on the counter, and are purchased through brokerages. So, broker yakubulira oba he can provide a derivative oba no. Broker wenjawulo. Bwabanga asobola okukolera derivative. Chicago CME, Chicago Mercantile Exchange yesinga okubeerako. In fact, ne Bitcoin kwe yasooka okubeera nga listed as a derivative. Bitcoin bwe baali Abamerika baali tebalina we baji exchange ngira Coinbase najja bo baji listinga ku CME. Kati erine ku Intercontinental Exchange, ICE, FTTX, crashinze because of liquidity. Zineno teziri listing a Bitcoin, and when you go into a derivative, you're not buying the underlying, it is just an option. It is just mirroring the underlying price of an asset of Bitcoin. Bitcoin eriku $10, yes, nene ebera ku $10. And eriku, like it is mirroring, but when you buy oberanga bwetulaba currencies, if you're buying on spot, ogenda wali eriku Forex Bureau, nomugamba mpayo $10, nazikuwa tewali leverage, sente zo zoine za $10, dola bwebera ku 3.5, oyina okubeera n'emitwalo 3.5. That is what you do on the Forex Bureau. But nemu stock market wechiri nemu spot Bitcoin crypto ku Binance nacho wechikola. But when you go to futures, ndoza akagamba ako kwe kali mu crypto. Bobanga obaddeko mu Bitcoin mu crypto, genda ku Binance ononya akagamba akaliko futures. Literally kiba kitegeeza nti you're going into this derivative. You will not own Bitcoin. For them, they will give you an option. The market can be divided into two. Which is exchange traded derivative. Zeba trading ila ko exchange, ne zeba trading ila on the counter. Like you make your own agreement on the counter, like ETFs. Waliwo derivatives ezibera ku exchanges, like listed on the regulated exchanges. Then waberawo ezitali regulated nga ziri eyo muntu ku muntu. So the legal nature of these products is very different, and as well as the way they are traded. Generally, engeri je regulations byanjawulo waneno mukanya na muntu man's agreement man bikoze bitya. So derivatives can be classified into, we have options ngabwe twogedde, options ngezezaako zinyonyola, financial derivative contracts that give a buyer the right but not the obligation. Oyina right oli oku settlinga, but you don't have the obligation to buy an underlying asset at a specific price, referred to as a strike price. Strike price kuwagulira during a specific period of time. These two things are so important. A specific price, this is the set price, and the predetermined time. Time we're expiring, as you don't have the obligation. You may take it or not of that underlying asset. American options can be exercised at any time before the expiry of its option period. On the other hand, Europeans can only be exercised on its expiration. Okay, Bob America, Boba Gamanti, anytime gwe wobogize, osobola okujja ne tukanya, roba tugeze twagamba December. Naye oyinza okujja before no closing position yo, before the expiry date. So naye mu UK, tosobola toina that option. You have to wait on the expiration date. Then we have futures. Nayo twajinyonyodde. Futures contracts are standardized contracts allowing holders to contract or speculative. Okay, bineno bye bimu bye tunyonyodde, tujja kuba tufuna gundi abana abasobodde ziyitamu. Then twina ze Twitter forwards. Zineno types za derivatives. Categories, twina options, forwards ziringa futures. Forward contracts are similar to futures in the sense that the holder of a contract possesses not only the rights but also under the obligation to carry out the contract as agreed. However, forward contracts are over-the-counter products. Zineno tezigenda ku exchanges. It is not tezigenda ku exchanges. They are not regulated. Ziringa nga bwe tugambye omulimi wa kasooli n'omuguzi. Mwe mweyogerezaamu kaawo. So they are not regulated. So tezina trading rules. Mwe mukanya ne mulaba nti oyitawo n'okola ki n'okikwasaganya. Then twina swaps. I think swaps are very important naye ngenda kunyonyola ku swaps. So Swaps mainly are derivatives in contracts, derivative contracts that involve two holders, or two parties, that exchange financial obligations, which are interest rates. We call them interest rate swaps, are the most common. Waliwo endala credit swaps, waliwo interest rate swaps, they are the most common. Waliwo ne energy swaps, waliwo bingi. Nenda kuzinyonyola mu katono tumalirize nezo, I think. Swaps are not traded on the exchange market. Zineno ze zimu ku ways banks ze zisinga okukola mu sente. They are traded over the counter because of the need for swaps contracts to be customized to suit the needs of and the requirements of both parties. Kankanyinyonyolemu ko katono swaps. Tugambe waliwo bank loans officer A ne loans officer B. Loans officer n'agaba loan tugeze yonna loan gy'agabye nga tugambe agigabidde ku interest rate ya 15. Tuina kye tuyita variable net fixed rate. Variable literally meaning nti eba varyinga with the increased interest. Buli Bank of Uganda bweyongeza interest rate, naawe gwe yafuna loan eno tugeze B ng'eyiye eri variable. Mulukone lungi. Bamu bafuna loan nga tamanyi na gundi kijaafunye ne fixed. Ona ina fixed rate yemu tugambe regardless of the loan size, rate yemu ya 15. Now, buli interest rates we zirinnya, ezo no zigenda kulinnya with the increased interest rates banks ziba zitaddewo central banks zebeegize. Naye ono buli lwerinnyo obesse ye tafaayo. Kati ono alina gundi ayinaki ali risk free kubanga ye rates ze ziri fixed. Taina risk nene. Naye ono alina risk nti rates zisobola okukkirira wadde alina gundi ya nti rates zisobola okulinnya. Naye risk gy'atya nti rates zisobola okuva waggulu ne zikkirira. For example, essaawa zino mu US rates ziri mu 4%. Kati in case nga government etandise okusala rates previously zaali ku 0.25% interest rates. Essaawa zino ziri ku 4%. Kati ono yenne yafuna loan ku 0.25%, interest rate ye kati eri ku 4%. That is variable. Ono ekyali ku fixed. Ono ta enjoying the fruits of having a risky rate. Naye alina ali stable nti rate ne bwekkirira ne bweyambuka yamanya alina okufuna zineno. Kati this person ayinza okugamba no neraliikiriddemuko rates zisobola okukkirira from 15 ne zigendera ddala wansi ku 8. Kati n'anoonya omuntu eyandyagadde okuswapinga naye rates ezo. Tebaswapinga loans nti ono namuwa million 10 kati ne loan ngikwereddeko. No, ono agenda kuswapinga rates like the interest. Kati in case nga interest zirinnye ono abeera ye afunyemu olw'oku undertaking that risk. Sigenda kudda mu calculation naye ye explanation. Ono aswapinze risk eyo agenda kufunamu. Naye in case nga egudde agenda kuba akoze loss of that. Ono nga ye enjoying these fixed kati baswapinga ono nazeeri nazeeno. Kati olw'okuba balina okwaguringa kyovola tezibeera ku ki ku exchanges. They don't go on the exchanges kuba be balina okwaguriwinga on the terms. In most cases these banks be bakola ebintu ebyo like that. So those are the credit swaps. Those are some of nezo derivatives. So akatale byebimu kubirimu. Interest rate swaps usually involve the exchange of one stream of future payment nga bwe tugaba based on a fixed rate for a different set of future payments based on a floating or a variable interest rate. Basically, interest rate swaps occur when the two parties, one of which receiving a fixed rate interest payment and the other is receiving the floating rate, mutually agree that they prefer the other's loan arrangement. Nga bwe nkinyonnyodde waneeno nti oli ali gundi zineno mpanvuko kubanga waliwo abagenda okufuna PDFs zino abayinza ozikozesa okusomamu in most cases so that someone can pick them out. So in an interest rate swap, the only thing that actually gets swapped are the interest payments, not the debt. So baswappinga interest payment oli sente zagenda osasula ku ne basigaza principal oli bw'oba wamuwa loan ya milioni 10 tugeze buli mwezi milioni 10 plus tugamba alina okuzaako milioni emu emitwalo 2 gya interest milioni emu let me see kati 2 gino eno oli gyagenda okusikira gyagenda oswapinga bwe ziba fixed kati owa variable oba kye tuyise floating zino eno zisobola okweyongera oba zisobola okendeera ebiseera ebisinga omuntu alina fixed gundi interest rates zibeera wagguluko kubanga ziri fixed okusinga alina floating kubanga floating zibeera wansi zisobola okulinnya kati abamu bakkiriza ne batwala floating gundi naye kati owa bank naye aba yeeraliikirira nti bwenfuna aneeno kabeera kaweweevu naye derivatives mbadde nnyina okuzinnyonnyola kubanga they drive the spot market kyova olaba mu USA we trade almost in Forex we don't trade spot we trade derivatives and we trade what we call CFDs contract for differences we take a difference ekyo kye tu trading mu Forex this is a derivative what we trade in Forex tewaliwo gwogenda gamba nti kati mpa dola zange ze naguze mpa euro zange ze naguze no you either speculate nti it is going up or down we are trading derivatives banai derivatives are so important as spot as important as Forex ebyo ebintu ebisatu bikulu nnyo if you don't understand stock market tugambye either olokoka oba ojjanga oteredde derivatives and Forex bineno in fact Forex talina nnyo nakyo olina musomako you don't need to okusoma Forex no because you're going just to naye bino ebibiri stocks like the stocks kuba representing at the underlying nga bw'olaba Forex like a Ugandan shilling we are holding a physical asset bw'ogenda ali n'ogula dollar it is a physical asset as a stock now for us who are trading we trade the underlying value of an asset which is the Forex we are trading the underlying value of a dollar so understanding derivatives is so important